Well, welcome back, everyone. It is the second day of one of the sleepiest weeks in markets, but this is not a sleepy week. Let's get right into the S&P 500, the market structure. If you've been listening to Rob in recent videos, listening to me in recent videos, you've heard that this market better get going quick, otherwise it might get busy going the other way. And what we've got is a market that has paused by and large just underneath the all-time highs that were made in the middle of July. Now, what we're seeing here is a daily candlestick chart of the S&P 500 E-minis, the futures. When you take a look at what's overlaid on top of price, we've got some powerful technical toolkits and strategies like the Champion Trend Pack toolkit. And that's one of those toolkits that has a handful of indicators. It's a suite of tools that works in a sequence. They work in conjunction with each other. And the sequence is where the power is. What you can see when you get a buy zone signal from the Champion Trend, and then get that darker opaque green zone Champion Cross with the main chart, bottom main chart dot, you've got a buy signal state, and you've got stage one for the most fundamental part of the Champion Trend Pack toolkit, and the next stage is wealth signal. In this case, it did come in on the same day. Not something that's strange, but not a typical outcome. When we then look for what's next, when we're in stage two, getting to stage three where we can have accelerative rises, where we get breakout forecasters, that's these dashes right over here, is a very high probability. Now, we are in a market where the Qs got a haircut, and of course, the SPY and the Qs share a lot between them. So this is an atypical presentation where the breakout forecasters are underneath the all-time highs that were made back in July. Where is this market likelier to go to technically? Now, it was interesting this morning, starting off the market day, over at Wealth Charts and over at becomeabettertrader.com in the active trader room, where I let folks know that we shouldn't really write today off as a day that unravels. We were in the red into the open. Small red-bodied candle was presenting, and selling was at least modest and continuing. However, the market trend coming into this consolidation process is quite strong and must be respected. And where we need to see a sign, a signal, something that has high probability associated with it, is at the end of the three stages from the Champion Trend Pack toolkit and its sequence of signals. We usually see price action come back and test the last or the second last breakout forecaster and act as a bounce area off of it. Now, they act as a bounce area. Now, what we know is when we're up against all-time highs, and a key component in terms of market cap weight is holding the SPY back, we're not going to have expansive rises. Typically, when you see breakout forecasters, now you get these massive, expansive rises. You can go back in time and take a look at that right over there. You've effectively got from roughly 5,200 all the way up to 5,325. These are expansive moves when we get these indications. However, up against all-time highs, with the nature of the market changing into a volatile month, coming to a theater near you very soon, September, wherein the economy is still struggling. No matter how good the consumer confidence data presented this morning, the market initially saw the data stronger, sold down, but then what? It papered over it, as if it didn't even matter. Well, if we see the real economy as struggling, at the end of the day, real companies will be hiring real less. My thought process was, the market's not ready to roll over, but we're very close to doing what we usually do, which is come back and test the last or the second last breakout forecaster. Now, that effectively would be about 100 points lower than where we are right now in the ES. That's equivalent to $10 lower than where we ended the day on the SPY. Now, that's a significant move. It's signaled when we have an absence of 3 to 5 days from the last breakout forecaster of breakout forecasters, and or if over the course of the first 2 or 3 days without a breakout forecaster, we see the fast speed line cross below the slope. Now, we're not at the 5th day. on the fourth day, and we have not seen that speed line crossover. And in fact, we've got some indications that are counterbalancing this, saying that we can stay up in the air for a little bit. Now, as a result of this, I was able to utilize the Champion Trend Pack Toolkit and our technical suite of tools to help with trading on the short side and on the long side in today's trade with one contract only. I was able to gross about $575, as you can see over there. Now, when you think about the opportunity in financial markets with bigger moves for small lot retail traders to utilize high probability strategies, there are plenty of them, but having the knowledge, the experience, and understanding the rules and understanding risk management is of utmost importance. Where we sit right now is a market that under the hood is experiencing some rot, but it has not given up its glow. If we take a look at the 4-hour chart, it projects out 3 to 5 days, and what you can see is the candles went from green to blue, now back to green for today. Now, this does not mean that we're out of the woods, but it is an improvement, allowing for a move that can retest these negative divergences and potentially squeeze out a higher all-time high ahead of a market pullback. When we go down to that 1-hour chart, which is essential for the day trader, I used it multiple times today in front of the Active Trader Room audience and showed students why I'm taking this live trade from entry all the way through exit right in front of them and what the rationale was. Even being able to utilize the tools to provide a grade on the actual trade, meaning how high of a probability. Where we ended the day on the hourly chart and where we ended the day on the 4-hour chart was not extraordinarily bullish, but it was an improvement vis-a-vis where we were earlier in the day and overall vis-a-vis yesterday, leaving me in the spot where between today and tomorrow, where we get NVIDIA's earnings after the bell, we have a fair chance to actually shoot up and try and take out the all-time highs. A pump followed by a dump, or a pump that dangles up in the air waiting for Friday's data, which is the core PCE price index that the Fed uses to make decisions. Now, with oil up off the lows, I do see a higher probability for that Friday data to potentially be a disappointment. NVIDIA is a wild card. The higher the market goes, the bigger the propensity for a move lower through the NVIDIA earnings. And as it sits right now, we're grinding up against a resistance structure, trying to get above those highs